Now that you know how to set your budget, record your data, and how to interpret the balance sheet, it's time to learn how to analyze your data. The good news is that it's not too complicated. There are two worksheets involved with this, the summary and the monthly comparison. Let's talk about the summary first. This sheet is going to add up all of your transactions in a given month and display them here. First, you need to pick the month you want to analyze. In this case, let's choose July since I already have some transactions entered in that month. So you select the cell, hit the drop down, and we'll choose July. There are three main categories: income, savings, and expense. Income and savings are pretty self-explanatory, so let's talk about expenses. On the left, you have all of your categories listed out. As you add or subtract categories from your budget, they automatically appear or disappear here. So you will never have to enter anything manually. The next column is going to show you the monthly budget amount. It pulls that straight from your budget. So as you can see, everything here is simply pulled straight from these two columns here. So this column is the actual amount. It's the sum total of all the money you spent in this category if it is not a prepaid expense category. So for rent, for example, we spent $400 this month. Now what about prepaid expense categories, such as insurance and gifts and clothes in our budget? Well, this sum total is actually the allocated amount for the month, not what you spent in that category. If this sounds confusing, let me try to explain. Remember, the goal of prepaid expenses is to take the expense and spread it out evenly over each month. So that's what's happening here. Let's use insurance, for example. Assume you know that in December you will have to pay $1,200 for insurance. Knowing this, you budgeted to set aside $100 each month for insurance. When you allocate that amount each month, that's what's going to show up on the monthly summary. You're essentially paying for your insurance each month in advance, hence the name prepaid expense, and that is why it shows up here each month. So this is just this savings allocation entry here showing up in the summary for the month. So let's think of it another way. Any amount in any of the prepaid account balances on the balance sheet has been accounted for in the monthly summary. So anything that shows up here has already been accounted for. When you spend money out of these accounts, reducing their balance, this does not show up on the monthly summary because you would be double counting it. Now, if you did not properly budget for insurance and only set aside $700 in the first 11 months and then had to pay out $1,200 in December, your account balance would initially be negative $500. And to fix that, you would allocate an additional $500 in December, and this $500 would show up in your monthly summary, and then it would be clear when comparing months that you spent a lot more in December than you did in any other month, meaning that you did not prepay enough money for that expense. So that's just a really long-winded way of saying this here is anything that you enter in savings allocations. So you take your money and you prepay it. So you're not actually spending that money, you're just setting it aside. And that's increasing these account balances. When you reduce them and actually spend that money, that's not going to be counted here because that money was essentially already accounted for in that category. It just spreads out the hit over each month. Okay, now that I've explained all that, let me quickly go over a few other things. The far right column is the difference column. It's going to be your actual amount minus your budget, as you can see. If it shows a negative amount for expenses, that's good, because it means you spent less than you budgeted. If it shows a positive amount, that means you spent more than you budgeted, which is not good. So any positive amounts will be highlighted in red for that reason, at least for expenses. Revenue and savings is the complete opposite. A positive number means you're over budget, which is actually good. In this case, negative amounts are highlighted because, as you can see, we only earned $900 when we budgeted $1,000, which is not good. You can also switch this cell here to percent, and you will see the percent differences. Pretty self-explanatory. Two more things to point out here. The savings section is simply your revenue minus your normal expenses minus your savings allocations. In other words, it's the total amount you contributed to savings each month, or this month in particular, July, we contributed $200. it actually is going to match the savings balance because there's only 1 month's worth of transactions. As soon as we added transactions for August, the savings balance would be this amount here, the savings for July, plus the savings for August. And it would continue on. Finally, we're going to take a quick look at the monthly comparison worksheet. If you understand the summary, it'll be pretty easy to understand this. You're simply going to have the amount you spent each month for each category. So you have revenue, savings, and then all of your expenses for each of the 12 months. So you can compare them side by side, as well as the total. If you come up here and hit this plus, it's going to show you the over under, or how far you are off your budget. Again, anything bad will be highlighted in red, really, and anything good or positive compared to your budget will be just black, like everything else. So again, same info as the summary tab. You're just looking at all of your months combined, and you can go ahead and close this if you want to. Each of the months have an over under, but I thought it looked cleaner if they're not immediately showing, so that you can directly compare them. So here are July numbers. Again, it's just pulling in the actuals from your summary. All right, well, that's it for this video. You now understand how every single worksheet works and how to use them. All that's left is for me to give you a few additional tips on a few things to avoid, how to get started, and rolling over your data to the next year. And we're going to go over all this in the next video, which is called Getting Started. I'll see you there.